The
Just
reversal.
press the. All right, we're back. It's Tuesday. We got some live trading. Right. Welcome, everyone. How's it going, Victor?
Hi. How are you doing today, Jonathan? I was just saying that you see that movement in the market right before we started.
Yeah.
EU started going up. I know I'm starting right off talking about the price, but I mean it's something remarkable. How you how you've been doing today, Jonathan, and everyone else? How is everyone? Let us know in the chat. How is this day treating you today?
I've been very good. I've been recording some content, doing some very interesting things. We have a I can't say too much, but we do have a very exciting product coming up that you probably going to be hearing about. Maybe hearing a lot about next year. So we're working on a lot of different things in the background. So yeah, I've been busy. I haven't been able to be trading or watching the market at all, but yeah, we had an interesting, very interesting move on EU for sure, and I like the fact that we're still holding support. We're still the idea that the idea that this is accumulation for me is just that conviction is growing day by day. I mean, still
Going
there's
away, you mean?
no growing day by day.
Growing. Oh, I'm sorry.
Yeah.
Yes,
So I
growing.
think yeah, yeah. Maybe I said going away. I don't know, but it's growing. It's growing day by day. I'm getting more conviction into this because the longer you stay here in accumulation, of course, there's going to be risks. The longer you stay here, there's going to be risk, and the more you test these lower areas. But I still feel like there's a lot of bearishness on the Euro USD pair. So it should break. Like it should really break to the downside, and I feel like it should already have done that. And I think that's what have happened. We've had a very big move to the downside, and I think that is what the market have priced in. What is happening right now? It has already priced that in. So
So you
yeah,
so you think the bearness in the market has already been made its move, and now we are really there isn't any lower prices. At least that's what you assume. Is that correct?
well, I can't really assume anything, but I'm building a story. I'm trying to create a narrative here, a story of what price action is doing and where I think price action might be going. At least what's most profitable, probable. And I'm thinking, when I'm as a swing trader, I'm looking at the markets and I'm thinking, I'm not thinking what's going to happen tomorrow or what's going to happen in 2 days. I'm thinking what's going to happen in the next months. So I'm trying to get an idea of what the world, in terms of economic and geopolitical, how will the world, what will the world look like in the next few months? And then I'm trading based on that. Of course, I'm also waiting for confirmation in price action. And I think that's also what have happened here with Euro USD is the move that we saw to the downside was obviously traders pricing in what's going to happen in the future. And everyone kind of knew that when Trump got elected and we saw the economic situation in the EU, everyone kind of saw where the price of EU were going. And that's why we had such a big escalation of that downtrend. But now we're in the same scenario. So the narrative has already been playing out in price action. Now I think traders are waiting for a reason to continue that move to the downside or reverse the whole situation. And I think specifically, people are waiting for Trump to come into office. We know that he's, the first day he gets into office, he's probably going to be signing a lots of, I don't know what that is.
Executive
That is
orders.
executive orders, exactly. Like he's probably going to go in and just, they're going to be papers flying all day, tariffs, crypto, like all these sort of things. And that will give us an idea of what's actually happening. Where is the market going? So I don't think EU is going to stay within this range, until January the 20th. But is it such a weird thing? Well, actually, I think it's going to stay in this range for the next month, because if we look at if we pull up the screen here, and now, again, we're talking about higher time frames, we're talking about macro, like we're gonna go straight into the action soon and start trading. But I think this is important stuff here. I'm going to be sharing your USD here, and what we see here is, if I tell you guys that this is the daily chart, and if I tell you that your USD is going to be trading within this range for the next month, you're probably going to say, but why are you crazy? A month within this range? That's insane. But is it really that crazy? If we look at where inauguration is actually going to take place, it's going to be right here, okay? That's the date of Trump officially entering office. Is that really such a weird thing to think that price action is going to stay within this range? We can look at what happened, like how long did we stay in here? I'm going to assume that this whole area is a range. 37 days. How long have we been in here? Around 37 days, because we have been in here for the same time as here. But given the circumstances, I do think that there is a chance. And you can also have this range can develop, right? Because the way that I view the range, it might not be this in the same way as others view the range. Because I've seen a lot of people, they draw the range on EU like this. I'm going to make it a little
without
big.
that move down, that lower
Exactly.
wick down.
They're looking at the wick down as a anomaly, a fake out, or basically as a deviation. Exactly. So what might happen is we form a new range, which might be within my range. So the characteristics of this range can change. While if you look at more of its zoomed in look, you have different ranges and different price structures, and actually maybe ranges. But if you zoom out and you look at the bigger range, then you might see something like this. And that's where maybe the move to the upside will start. Or maybe even, something like this. Like, you never know what's going to happen, how it's going to look. But there doesn't seem to be any Khan is saying here, EURUSD is a sell. Yes, you say that EURUSD is a sell. Everyone else is saying that EURUSD is a sell.
And it is.
Yeah, it is. And before, I read like, I think I read 11 different economic reports before this live stream from different institutions and brokers and banks, etc., both on the sell side and on the buy side, and everyone agrees sell your USD. Everyone agrees that your USD is a sell. So I'm thinking, okay, everyone thinks that your USD is a sell. The move to the upside will be quite swift. The shift of structure to the upside will be, when it happens, will be happening very quickly. And the thing is, and this is very important.
Hold on, before you continue.
Yeah.
I think we need to do a step back. The sell that you, maybe I missed it, maybe it's me, but maybe I'm not awake yet. But the cell structure, what did you say? The cell signal is about to be shown. What the structure? What was it?
No, what I'm saying is, when when the structure shift.
Okay.
So
To
what now?
to
Because
the upside, that would
everyone,
be.
yeah, exactly. So
Okay.
everyone is shorting this. So when the
Yes.
structure shift, when there's a sentiment shift, then the upside is going to be happening quite quickly because a lot of people will be left on the wrong side. If you take this into consideration, now if you think that EU is a sell here, which again I kind of agree with that from a price action perspective, okay, and from a fundamental perspective. But if you believe that this is a sell, I urge you to go look at the sentiment up here. What was the sentiment for your USD up here? It was quite interestingly, a lot of people are looking for a break to the upside on Euro USD. So looking at the sentiment at around the time of this high, which is in September, a lot of people were thinking, well, there is the chance of seeing a breakout here, which led to a strong move to the downside. And now at the bottom, everyone is wants to sell. And the thing is, this is very important to remember. The crowd, okay, me and you and everyone else trading, the crowd is always wrong at the bottom and at the top. They're always going to be wrong at the bottom and the top. And when they are, the tops and the bottoms happen in a quite explosive manner. This is distribution phase right here. What comes after distribution? After distribution comes the markdown period. And that happens on high volume. A lot of people are going to lose a lot of money, and it happens in a very violent way. And the same thing can happen in accumulation. It doesn't normally do that, but it can happen in accumulation if enough people are caught on the wrong side of the trade. And we can have a similar move here. I mean, we can have a similar move here as we have on the break of distribution range. The move to the downside after the distribution range is often way more aggressive than the move to the upside from accumulation. Because when people are panicking, they just sell everything. They want to get out of everything, and they're just panicking. And then you see prices just drop immensely. But at the beginning of accumulation and the beginning of an uptrend, people are still in belief. They're like, this is not the breakout. This is not the breakout. I'm still bearish. Price moves higher. Maybe this is the breakout. Maybe my bias is wrong. And then it shoots to the upside. And that's where the public participation phase begins, because now everyone is convinced that it's time to buy Euro USD. And that's the whole idea that I'm trading here. I'm looking at the market and I'm thinking, what are people thinking? What are people thinking right now?
I think it's very, we're in a very interesting. We've talked about this previously, but it is very interesting because on the weekly time frame we are at the bottom low of that big range, right? We talked about this earlier. Maybe I should put my, or maybe you can put yours. Yeah, we're at the bottom of that range if we're not including that move down that we had in October 2022, right? Not including that from the range we are on the weekly. We are at the bottom of that weekly range, and within that, if we zoom into the daily, we have this smaller. If we zoom into the daily time frame on your screen, right, we can see, and that range that you have marked where you're talking about, we are in another range within that bigger weekly range, right? Fractally a couple of not a couple, one step down from weekly to daily. And so if we are on the bottom of the smaller daily range, or not a bottom, we are at the middle of it, which is within that, we are at the bottom of the weekly range. So if this one reverses, you can catch both of them, the daily and the weekly move, because the weekly is also at the bottom of the range, meaning it could be looking up for the middle of the range, maybe even going eventually to the top of the range. And this might be this area. But we're saying here a couple of bars, could be a couple of weeks, this area where we are at that place, that interesting place where things can change on many levels at the same time. That's why I think it's very, very interesting, because if we have a reversal from here, we could be looking for upwards of 400, maybe even into let's see, where we are right now at, let's say, 05 on euro dollar. And the middle of the range is what? The middle of the range as at '08, I think. So that's about 300 pips. And the top of the range is at around 1.12, right? So that's how much? That's 700 pips. Kind of a move that we're in, not in assuming or expecting or predicting, but it's in the realm of possibility. If this is the range, the bottom of that weekly range, and we're going to go back into the range, what is the logical place where prices were going to gravitate to? It's the middle of the range, or the other side of the range eventually. Maybe not quickly, but eventually, yes. So this is an amazing place to be watchful for that reversal if it does happen indeed.
I love this comment because this comment is could be a textbook comment in a book about market psychology and psychology of the crowds.
Despair.
Yeah, it's because it's like this comment right here is like, it is bearish, it's extremely bearish, and I'm absolutely sure of it, and EURUSD is a sell. And it's like, yep, that's the type of comment I want to see for me to buy more EURUSD. Because when more people are super convinced of EURUSD being bearish, that fuels the possible move to the upside, because that's liquidity right there. And it also means that a lot of people will be left on the wrong side of the trade, which creates stop loss orders being hit and a lot of liquidity for the smart money. And right now what we're doing is we're looking at what are the smart money doing and how are the smart money trading. Well, let me tell you this. You know the saying, buy when there's blood in the street. That means when nobody's interested in buying euro, that's blood. That's when you're supposed to be buying. When everyone is selling euro, when everyone, like, this is capitulation. The people that got in on that wick right there, that's the people that know that this is panic, this is capitulation, this is when I deploy cash into the EURUSD market. And they made money on that move. People that the counter traded that move made money on that move. So you gotta be careful, all right? You gotta be careful, because if you're super convinced that something is gonna work out, how is that gonna feel when the stop loss gets hit? You know? And you might move that stop loss. You might move it like a little bit more. I'm gonna add into this trade. It's not confirming my trade, but I'm super like it's gonna move, you know?
Yes, I think you're definitely onto something there, because it's the same thing that when that euphoria on the inverse situation, where you have everyone fully bullish, extremely bullish, let's say on Bitcoin. By the time Bitcoin reaches whatever highs it's going to reach in the future, and we see people saying on, I don't know, the radio, on the internet, on news channel, that they're going to sell their houses to buy Bitcoin because Bitcoin is such a success. That's the euphoria that might be the signal to actually get out of the market, right? And that's the same in an inverse situation with right now, where if everyone is very bearish EU, that might be a reason to start looking for that contrarian trade. And that's what we're doing here. We don't say it's going to go down, but if it does reverse from here, it's a great opportunity.
You know, when we say things like, if you see a headline saying, Bitcoin is the future of this and that, and if you see the newspaper being very bullish in the market, we're not just saying that could be a contrarian signal because we think it's fun to think in that way. Like it's actually statistical. You can actually look at the statistics of this, and most of the tops in the stock market are followed by or around the top, before the top. Obviously, you have newspapers printing issues of how bullish the stock market is, and headlines saying that it's going to move way much further, and everyone's entering it. The thing is, and how this works is so newspaper, they write about things that they think people want to read about, And people only want to read about their stocks after they bought the stock. Okay, so if a newspaper puts on the front page, a issue of Apple, that's because people have already bought Apple. It's not because they want people to buy Apple. It's because everyone is already in Apple. There's no more money to buy Apple. It's the end of the trend. That's the top. Everyone wants to read about Apple because they own Apple, and that's why the newspaper are writing about Apple. So when there's a newspaper headline and on the front page, there's the Apple logo saying like, will the rally ever end? Now's your time to buy. Everyone has already bought. And the same thing with Bitcoin. When everyone has already bought Bitcoin, there's no more cash to buy Bitcoin. The rally is going to end when there's no more cash to buy Bitcoin. So the logic is quite simple. When everyone wants to sell EU, when everyone's already in shorts for EU, there's no more capital to sell EU. Well, not exactly in those ways, but when everyone's in a short on EU, yeah, relatively, so think about it. It's not really that complicated. So when I say things like, oh, when your grandma is asking about Bitcoin, when you're in your Uber or taxi, whatever, and the driver is trading Bitcoin on his phone while driving, that's a top signal. It's not because I'm having fun. It's because there's a logic behind it. When everyone's already in Bitcoin, then there's not a lot more people that is going to buy Bitcoin. The ones who are late are the ones who have no idea about it from the beginning, and that's why the people who's not in the industry, when they start asking questions about Bitcoin, that they are the last ones to enter. And if they are the last ones to enter, many more people have already bought Bitcoin before them. That makes sense, I think.
That does make sense. It's about human psychology. It's about herd behavior, right? Everyone is just following the crowd. But if when it reaches that critical point where the masses are, people on the street are talking about things they normally never talk about because they're typically are not traders, but they're talking about those subjects, about Bitcoin, maybe perhaps even altcoin. That could be one of the signs, right? That the mass following the herd has jumped on the bandwagon, and that could be where because they're not traders, right? They will react as humans typically do when things go against them, right? Act on emotion, and that's what causes those euphoria and those moments of despair where everyone is, maybe they sold their houses to buy Bitcoins. It's just an idea. It may not be literally like that, but and of course, if it goes against them, you can imagine what kind of headlines that's going to cause, and that is exactly the indication that we are either at the bottom or at the top. Those extreme emotions in human behavior.
We have news in a few minutes, and I'm gonna see if I can.
Yeah, 5 minutes to be exact. We have CAT CPI coming out, Canadian dollar, and also sales number, retail sales number on the US dollar. That is.
Yes, we got Euro USD at the upper left. We got S&P 500 to the upper right, Bitcoin to the lower right, and gold to the lower left. So I think we can. Take a look at the reaction to the news here. It's 1 minute. How much minimum time, according to you, traders take to become profitable? Okay, so how long does it take to become a profitable trader? Yes, that's a great question. Okay, so it takes a long time, and so there's this. Okay. When we talk about probabilities, there is actually the chance that you can be profitable very quickly. But long-term profitability is something much different, because imagine that you create a system and you backtest it with good results or decent results, and you start trading it live. And just when you start trading live, that system has a profitable period. Okay, so let's say it has a profitable period of 3 months. You've been trading for 6 months, you try the system, you're profitable for 3 months. Are you consistently profitable at that point? Well, yeah, I guess, because you've been profitable 3 months. But then that system enters a drawdown. You're unprofitable for 3 months. And you start thinking, is something wrong with the system? Let's switch system. You switch to a system and you begin trading that system in the losing periods. You're not making any money for the next 3 or 4 months. Are you consistently profitable at that point? I would say no. So what you have to do is you have to develop a system with that in mind to make sure that you're not profitable because of pure luck or chance that you have a winning streak based on the probabilities of that system just when you're starting out. And this is actually quite dangerous because system hopping is a major problem in trading, and I think one of the most common mistakes that new traders do. So I would say that it's probably going to take maybe 2 or 3 years of, I'd say on average, I'd say 2 to 3 years to become profitable if you do everything the right way. But
I would say
it can
yes.
be 10 years as well.
That's what I was gonna say. It takes 2 to 3 years if you're really dedicated and you invest all the available time that you have and do certain things right. Meaning, you focus on your discipline, you focus on your strategy, not hop around. Because if you don't, if you keep on hopping, you can hop for the rest of your life, and that's just not gonna be 2 to 3 years.
Yeah. Yeah, we got 2 minutes here.
I think that's Void is making a fair point here. The time it takes to become a profitable trader depends on the answer of this question. How long does it take you to build that discipline? You need to follow the rules, right? That's one of the key questions. If you fail on this point, no, that 2 to 3 years can be much longer. Because if you're not able to follow the rules that you find to be the profitable rules, then it's going to be very difficult to be profitable long term. That is what Jonathan was saying. That is that profitability. Just about everyone can be profitable trader. It depends on what you define by profitable trader. If you define that by having a week of wins of profits, then it's not that difficult. You might get that way before 2 to 3 years. If you define that by a day of profits or a streak of, I don't know, 3, 5 trades in a row, if that's how you define profitable trader, then it's very easy to be a profitable trader. But what Jonathan is referring to, lasting profitability, something that you can do consistently, not 1 week, not 2 weeks, not 1 month, but lasting, like over quarters, months after each other, not necessarily consecutive every month you're winning, but your equity curve is sloping upwards. That's the profitability, and that's the definition that we should be focusing on. Because temporary profitability is not that difficult. Just by chance, you have the chance. Even if you have a non-profitable system, you can be from time to time have profitable periods. So if you define being a profitable trader as someone who is consistently profitable, not necessarily all the time, but over time ends up going up the equity curve, then that takes a long time, a very long time. 2 to 3 years is maybe even on the short side of the expectation. The news came out and EU is moving upwards very nicely. Let me check. We can see that on the news. It wasn't a big gap, about a 5 pips move immediately after the news came out. And of course, it's only retail sales. It's not like the FOMC changed the rate, so we didn't expect anything, huge explosions either. But it is a price did react positively to the numbers. At least the first 35 seconds is bullish, the first initial reaction.
Yes, it's slightly higher than expected. It comes in at 0.7, forecasted at 0.6. So not a huge amount, but still it means that the economy in the US is doing better
Expanding.
and expanding, doing better than expected, which is I guess not totally unexpected. You know, it's the economy in the US is very, very strong. It was expected to grow
Mhm.
by 2 points, and it came in 1 point higher. So it's interesting. I mean, this should be short term bullish on the
On the dollar,
on
right?
that should be well.
It is not on the dollar. That's correct. But I mean, if the U.S. economy is bullish, it should be in economic terms something positive for the dollar. However, if it is an effect on what the interest rate decision will be,
Yeah,
then that's a different thing. And I think that's what's playing out here. It's not about the expansion being positive for the US dollar, which it is, but it is how will this affect FOMC meeting or the decision that's coming out. When is it coming out? Tomorrow, right?
tomorrow. Yes, tomorrow evening. So the thing here is something that, like, the U.S. economy being, strong is obviously good for the U.S. dollar, but it also depends on what scenario you're in. Right now, we're in a scenario where the Fed is a bit more cautious with the interest rates cuts. Right, they want to get inflation down, but um, but also make sure they stimulate the economy. So it's a balance, right? It's definitely a balance.
Yes, and perhaps the reaction, the positive reaction on euro dollar, meaning it's bearish for the dollar. That bearish reaction of a positive expansionary number is because now the expectation for a rate cut is less.
Yeah,
Right? So they expect the probability to be less that the Fed will be cutting rates, meaning that's something less for the US dollar in terms of attractiveness. So they or is that the correct way? Would you say, Jonathan?
I actually didn't listen to you because I was reading a comment. I'm terribly
N-
sorry about that.
no problem, no problem. What is the comment about?
Well, I'm just saying that the comment is, I don't know. There's something they know that we don't really know. I think, interestingly enough, there's this. There's one of the tenets of Tao theory talks about how, I don't know exactly the exact word, but basically it goes back to the saying that price discounts everything, which basically means that um, the price is reflective of all known information in the markets, and so if the big players know something that we don't know, and that is also reflective in the price because they're taking positions based on what they know. So everything that is known to the market, and this goes, of course, most likely to public information, but there is, of course, information that fewer people knew about, and that is the institutions and the smart money might know some things that is based on analysis, advanced analysis that we haven't seen, but the analysis is based on known information, the same information that we have access to. It's just that they have different ways of looking at the data. So most of the information of a market is available to the public, and therefore price reflects everything known about this market. So you're right about that. I don't think there's anything that they know that we don't know, but there are some things that we do that they don't do, and that is trade based on emotions. Like, retail traders, they trade based on emotions. They see Bitcoin breaking above 100K and they want to buy Bitcoin. They see Bitcoin at 10K and they want to sell Bitcoin. you know, they want to buy at the top when everyone else is buying. They want to sell at the bottom when everyone else is selling. That's not how smart money trades. They look at the lows and they say, this is a buying opportunity. They look at the highs and they say, this is an opportunity to phase out of the market because there's probably a top coming soon. So yeah, Gotta learn to
Yeah,
think about.
yeah, I wasn't sure who was they. They, the smart money, or they, those who are hosting the live stream right now.
Oh,
No, no, I think you're right.
okay.
I think the smart money is the right here. I think the person in the audience is actually, but I was a little confused right there. Who is they? But it's
Yeah, I
maybe
can assure
me.
you that I don't know more than what the financial analysts know about the market.
Yeah, in the end, we are, technically we are retail traders, however you
Yeah,
see that, right? We may have hours, I mean years of experience, but that doesn't make us any, any more institutional than anyone else.
of
We are
course.
not, right? So we are in the end we are retail traders as well.
Yeah, I don't work for any institutions. My camera. Yeah. Give me a second.
No problem.
My my
I
my desk is stuck in this mode. Yes, from now on, this is the way we're doing things.
we have I'm gonna put my chart on. This is, of course, the initial movement that we caught from the news, right? That this is the 1 minute chart, and you can see how the market after the initial move was up. We're now testing those lows or those structures that were in place before the news came out. We had a little structure here that is now being, of course, it's only on the 1 minute, but it's remarkable that to see that the market is testing and maybe going the other way after the initial move. Let's see how that goes. Of course, that's only the 1 minute, not very significant to be honest. But this is the area uh, where the initial move was started when we are currently below that area. So what does this mean, right? This is the opening price of when the news came out, exactly. So we are below that price currently, and it's interesting to see how that develops moving forward, right? Are we indeed going to uh, go lower, touch that, and continue, or is just thus a deviation as it squeezes the buyers from this initial move, squeezes them, pushing the weaker hands among them before it continues higher, or is this going to be a continuation? The initial move got people trapped, those who wanted to go long here, only to push them and trap them afterwards. We'll see.
Yep.
That's the initial move and possibilities right here. I'm in a long position to be transparent about it, and it has to do with that area that we talked about yesterday, that small slither of area of interest to me, which we did not have anything on the hourlies to tell me any signals on the hourlies yet. On the 4 hour, there's no reason locally to go long. Locally, I mean, but there is a reason on the quasi, on the bigger something to the left, on the H1 either also, right? I'm referring to this price action. There's nothing on the H1 that tells me to go long here, but there is on the bigger picture from the left, from the quasi, the bigger quasi that I've been showing you guys in the last couple of sessions. And if we look on the 5 minute, we did have already a very nice, not on the 5 minute, well, yes, it is on the 5 minute as well. We did have an area here very interesting that was created and revisited after the break of that neckline, and I am currently in that long from the quasi that was broken, and it did offer me enough room to hold it through open through the news. And at this point I have no decision to make. It either it breaks and it goes takes me out, right? And if that's okay, if that happens, and I lose 2 hours and two trades into this. And if the news actually is a propulsion for price to go even higher, then I'm just going to be holding for that. So I have nothing to. There's no management here. It's a passive trade management. But I'm already from this quasi. If I may show you guys, this is the left shoulder, and that is the head, the break. Let me see this. That's the break of the neckline, and that's my entry going up and currently holding that position. Yesterday we talked about sharing some levels. My entry was at around 80 something, and when this move went down and was coming back up, which is around 87 if I'm not mistaken. Let me check my 80 86 something. I have two different one is 80 60, the other one is 85 and some.
What is a quasi?
A quasi is short for Quasimodo. And Quasimodo, you may ask yourself, what is that? Isn't that the figure of the novel about Notre Dame? Yes, it is. That's the reference in Quasimodo. It being in the novel, it was someone who had some bodily how do you say that, figure that was asymmetrical, and that's exactly the reason why we use that name. It's because the Quasimodo is a head and shoulder, but an asymmetrical head and shoulder. And if I may show that on the screen, you have the normal head and shoulder, which is a reversal pattern, right? Very popular among traders. That wasn't the idea. Let me close that here. You have a head and shoulder where this is the left shoulder, the head, and the right shoulder. And there is such a thing as a neckline, which connects the base of those two shoulders, right? In the head and shoulder, this is the typical normal head and shoulder, which is roughly symmetrical. In the Quasimodo, let me extend this somewhat. In the Quasimodo, what you have is an asymmetrical head and shoulder, and that has to do with the neckline that is not, the base of the two shoulders are not at the same height. And actually, it can have different figures. It can have anomalies, something like this. All of this, to me, is Quasimodo because it's asymmetrical. That's a quasi, short for Quasimodo. Hopefully that helps the viewer.
Yep. All right. I'm also looking at so I'm looking at a few markets here on the lower time frames to see if I can find a trade. I think EU right now is I like how it came off. I'm looking at the 15-minute. I like how it's in a fairly clear range, and it came of the lows now of that range. I think you have to zoom out more. Yeah, exactly. So the low of this overall range here, it came off the lows. We get rejected here of, I guess, the middle of this range EQ.
Okay.
I think that would have been a good buy opportunity at those very lows. I also, you know what? I'm gonna just go open my screen instead of doing the analysis on your screen.
I like the reversal, as I said, because of, to me, yeah. Thank you for showing mine back. This area is interesting to me. So if the market hasn't invalidated that area yet, right? See, if we zoom in, I'll tell you, we'll show you, right? It hasn't invalidated with a close below that area. That's the same area that I've been talking to here. I zoomed in and it looks bigger, but it's only a couple of pips. That's why I said slither of interested area, right? It's only about 2.1, and I know it looks ludicrous to be making all those decisions based on such a narrow field uh, uh, of overlapping, because that's what it is. I know it sounds weird, but that's what my data has shown me, that those are the areas where prices are likely to tell the story by the way it respects it or not. And so far, it hasn't been invalidating that area. So that tells me that we might have a push from here. Buyers might be coming in from this area. And if they do, how are they going to reverse? Right? That is the area right there, those two yellow horizontal lines. And how would they, one of the ways that they can do that is, of course, through a reversal pattern, and in this case a quasi. And that's exactly what I identified, a quasi that is related to that small narrow area. That it happened right there, it didn't happen below it. If it were to happen below, I wouldn't be interested in it. It happened after that area was visited, not the first time, but still visited. And that's where the market apparently wanted, or is trying in any case, to reverse from. And that combination of things make it very interesting to me, because it's not doing it randomly anywhere. No, it's doing at a context of the place where it is doing that reversal pattern on the lower time frame. Makes a lot of sense to me. Does this mean it's going to, from here going to go way up? Not necessarily. It just identifies the area that makes sense to enter for my system. That's all what it means. It doesn't mean it's going to go up necessarily from this place, but it does show that if I have a reversal pattern on the lower time frame, this area makes sense. It means it is, to my system, it is profitable to be entering on a reversal in the lower time frame around this area, around this the overlap of those two order blocks. So I like the area as well. So what I mean is these structures, right? The way price reacts to these two, this one not so much, because it is below that entry order block, below the area of interest. I mean, but the first one, that's the reason why I got in, right? And I just let it go and let the odds, the probabilities play out, and I may get taken out, and I accepted the loss already. If that were to happen, it's not going to be it's business as usual. 2 losses, 2 R's there, and that's what I've wanted to share. I like the area as well for a long here.
I wanted to bring up my screen here and take a look at Euro USD here, and going to be looking at it on the bigger screen here. And I want to bring your attention to the MACD and the stochastics RSI. As you see right here, we have the MACD, and then we have the stochastics RSI here. Now, one major mistake that people do when they look at oscillators are they're looking at a trending market, and they look at a trending market and they say the RSI is overbought. A top needs to come in this trend now because the RSI is overbought. But that's not really how oscillators work, especially not in a trend. I would say that oscillators do not work in a trend. They work in ranges. At least they work good in ranges and very bad in trends. You can have something like the stochastics RSI giving you signals on a pullback in a trend, but looking at the statistics of how I believe you should be trading with oscillators is you want to look at ranges. So we can look at the low time frame range here of Euro USD. And one thing I like to do is to look at areas where I'm going to look at areas where the stochastics RSI is oversold, and when the MACD is also oversold, and also perhaps when you have a bull cross on the MACD. So looking at Euro USD, there's a couple of signals here, 2 good signals and 1 false signal. Does anyone know what this is? Candle range theory? Isn't that like, I saw something on Twitter. It's like someone took like ICT stuff and then just rebranded it and put a bunch of different name on it, and it's just
I've never heard of it, to be honest.
It's like,
then again, I'm not very present on the social media platform. So, but I have never heard of it.
Yeah, okay, so we're not gonna bring that dude up. The next lab, we're not gonna bring him up. Sorry about that, but no way. Thank you very much. Okay, so we got EU right here, and let's look at let's look at the instances where we have the MACD and the stochastics RSI both showing us a buy signal. Now, okay, not a buy signal, just in the area of interest, which is here, and around this time. That's when the stochastics RSI bottoms, and that's where the MACD bottoms. So that's stochastic RSI, the MACD, that's in the middle. And then we have one bottom of this range, which is not correct. Okay, that's going to be this one. I mean, I believe that's because this is a strong volatility move. But this is the way that I like to trade these ranges on the lower time frames. I like to look at where price is hitting one extreme, and when price hits that extreme, we want to look at confirmation from indicators like oscillators. And the stochastics RSI, I believe, is a very, very good oscillator for the lower time frames. But having a slower indicator like the MACD can also help to filter out the noise of the stochastics RSI. So as you can see right here, some stochastics RSI is at the oversold area way more often than the MACD. But when the MACD is in the oversold area and the stochastics is that as well, that's when you get the good signals. The problem with this though is within these examples, you can actually just remove the stochastics RSI and you'll get the exact same thing. But that's in this example. But if you look at more examples, you see that sometimes the MACD will filter out the bad signals of the stochastics RSI, and the stochastics RSI can help you identify good signals on the MACD. So how would we actually enter this? Well, what I would look at is, I think this reaction here is just perfect. If you look at this is actually quite insane. I'm not sure if you guys see this, but this is actually pretty insane. Let me show you what I mean. Okay, so this is EURUSD on the 15-minute. And I remember seeing this before as well. So this is EURUSD on the 15-minute. I want you to pay attention to this, and this. Now we go to EURUSD on the daily. It is so similar. That 15-minute range is so incredibly similar to this daily range. Look at the highs. We got that move in the middle, and then that range at the low. It's just incredibly similar. Going back to EURUSD on the 50-minute, same move, same structure, everything's just the same. This is almost like the daily EURUSD chart, but we have a break, possible break above the range. So going back to the,
if you go to the 1 minute EU, we can see the market going. Sorry to change your screen, Jonathan, but the market just changed direction again. So for those who are trading, those who are scalping the market, or perhaps waiting for what is the EU reaction to that news, we had the initial move to the upside, bullish reaction to that news. Then we had a retest of the structures that were created prior to, or the consolidation area actually, before the news came out. And the question was, are we going to the other way around? Did the initial reaction trap traders to go to the other direction, and it seems like that's not the case. That we retested that consolidation area, although it did squeeze a little bit, but it's not by much, about 4 pips, and then now it's actually continuing to the same direction as the initial movement. At least that's what it looks like. And if you look to the left, it has been bought up to the news already. So it makes sense that the initial news came out. It was as expected because the market was being bought up. It did have the initial move to go up, only to retest the consolidation area, and then to continue that move up. I just wanted to update everyone on EU's price action. Please continue, Jonatan. I'm gonna put your screen back on.
Right. Okay. So we got the 50-minute right here, and we did, as we can see, come down into the low of that and that range. And if we go into the lower time frames, we see that on the 5-minute, very clear range after a move to the downside, still surprisingly similar to the daily. And then on the 1-minute, we still see this range right here. So we know that going back to the 15-minute, we know that we are at the range lows. We have one possible target here, and we have another possible target at those highs, and maybe even up at these very highs right here. So going down to the 1-minute, we want to see a break above here. Now, given the fact that there has never been a candle close above this level, we can add a high on here. We see that that's the resistance right here. We could actually trade this as a breakout trade. That's the candle close above. I'm gonna wait for one more candle, and then that candle is closing above. We can actually trade this as a breakout trade, because now we have a much different characteristics of this range right here, and then perhaps trade it like this on the 1-minute. And we also know that a lot of times after a breakout, you get a retest. So we could enter one breakout trade here, wait for the retest of the level below, and then when that's confirmed, we increase the position. So that's the retest, increase the position, and when price moves, okay, so now it moves down. Come on and stop me out. Oh my God, that's horrible. Okay, so I would have been stopped out on that one. Let's see if we get another breakout. I love when you're not even live trading, you're actually trading on replay. But you get the whole idea. And now obviously we have the highs here, and when that level breaks, I think that's obviously the move that we want to be trading. Going back to, let's cancel the replay function here, and basically what you see is price going up into that range EQ area up here after reclaiming the highs of that range. So why I'm showing you guys this is that this is exactly the type of move I'm looking for on EURUSD on the daily. And the idea is that price action is fractal, and you can use the same method on all time frames. When we look at EURUSD on the daily, I'm basically looking for this, you know. It's pretty much the same as we looked at on the lower time frames as well.
So that's going to be, if price does do that that movement, we're going to have a break and retest opportunity coming up then on EU, which you will be all over, I'm sure.
Yeah, definitely. We got AUDUSD. I will have a good reaction here, I believe, on AUDUSD. If we pull that up, we see a strong downtrend leading into support, switching into somewhat bullish structure here, and a level here. Looking to 5-minute, we are, however, going into an area here as resistance. But if we come down here and have a bullish reaction, I think that might be a possible long opportunity. But then again, if we go to the 1 hour, this is insanely bearish on AUDUSD. But then again, we know we've looked at AUDUSD in the past. If we go to the weekly, we see that it's actually right on that very level. Go back to the 1 minute, and that's going to be, so we're above that very, very low here on AUDUSD, which is actually a good sign. We're holding that high time frame support. So might look at a reaction around that level.
That is indeed. I like that that analysis on AUDUSD. I'm currently in a couple of trades on that pair as well. If I may show my screen, perhaps I can share a little bit of this. Let me put my screen on.
Go ahead.
Yep, I'm just about to do that. In the meantime, perhaps if it takes too long, maybe.
By the way, we talked about MetaTrader not working for me yesterday. So what I had to do was actually uninstall MetaTrader completely and then restart the computer, and that worked. I tried uninstalling MetaTrader because like I had an update that didn't work, so I uninstalled it, and then I tried reinstalling it without restarting the PC, and I had to restart the PC for that new installation to work. So now I have it set up. I think in scenarios like that, it's really important to have different instances of MetaTrader, because you never know, something might happen, your computer might die, but then of course you have the web interface as well, I believe.
Yes, I use the MT5 on the phone to be my alternative MT5 terminal, because you don't want to be out of control. You want to have a backup plan on your PC, and this is the this is the trade that I was mentioning on Aussie dollar against the US dollar. As price came back to retest that order block, that's where I got in on the lower time frames, of course, and it is reacting nicely. I'm going to share my trading view. By the way, these trades they carry a risk of $50 per trade, so this is about 2.5 R each one of them. Let me share my screen, which was the actual there, and you can see how on the, of course I do my analysis on the lower time frames, but you can see how the market is this is the area, and that red line is actually, to be honest, I'm not sure why I put it there, but it is the area that I've been no, actually I don't know why the line is there, because that's not the structure that made me buy in. I was gonna say this has something else to do. I'm not sure if that's something with my other strategy, or
actually I have no idea what that is.
But in any case, this structure, this quasi on the lower time frame, is what made me get into this trade. And the reason that I got in, of course, is on the higher time frames, we are in a range, we are in a daily entry order block, and on the one hour, you can also see we do have a bullish order block, entry order block. Actually, it's the last one for this quasi, which is, there we go, this is the quasi, and it breaks it. We talked about this already a couple of days ago, and we had a couple of entries here, but now which failed, but now we have the last entry order block on that quasi. If price is going to reverse, it is still within that higher time frame daily order block entry on the quasi, and it makes sense also on the hourlies to be entering at that area, and that's exactly where the reversal pattern on the lower time frame happened. And if we come back, we can see why that trade makes sense, because it is, as you can see here, it's not on this time frame to be exact. This is on the 5 minute, and the quasi was on a different entry, a different time frame, but still you can see how it comes back to that entry order block and moves away before the news actually hits the market. This is of course the news. Let me see where the news was. I think it was here. That's the news, the initial move, and then retest and then continuation. So before the news actually comes in, the market already shows the signs of a possible reversal, which is this quasi on the lower time frame, which happens on the hourly area on the bigger quasi, which happens also on the daily entry order block on the daily quasi. So it makes, that's the alignment I'll talk about all the time, that I need to see if the market does all those things in the right order and the right time frame, then you got me as a buyer or a seller, whatever. But I'm gonna participate there.
Yeah, I like that.
There, that's the entry order block on the 1 hour, and that's, see that engulfing? That's the 1 hour confirmation that we hit something here. How big is it? Time will tell. But there, we got something here because the buyers did come in. The buyers did overtake the sellers by forming that bullish engulfing. And you can actually, I didn't mark it because I was already in the trade, but you can already see how that on the hourly, right, it comes back and hits that that order block very, very nicely. I mean, how beautiful is that? It creates that order block, comes back and hits it right there. I mean, what else do you need? And actually it creates another opportunity to go long here. You have an outside bar, which you, if retested, it hasn't been retested yet. This is a fresh H1 order block, this one, right? If it gets retested, that could be a nice area for us to get in. I'm not going to be putting more in, at least I don't think so. Let's say it does something like this, breaks, creates that quasi. I'm going to be all, if I see this, I'm going to be entering. But that's the area I want to be, I would like to enter if I were, watching this all the time, which I'm not, because I focused on EU and GU mostly.
I currently have a order in for AUDUSD. If I can take a look at that, perhaps show you what I have. So as you remember from watching TradingView, I want to see retest. It seems like it might actually start reversing before hitting my order here. As you can see that, yeah, that's a powerful move right there, and it seems like adding a where.
What pair is that you're showing?
Oh, this is AUDUSD. AUDUSD. Okay. If I add a horizontal line right here on these highs, you see that it's not coming down and testing this level, it's testing the level above, which means that this is a strong momentum move. We might see a shift in structure here because it doesn't come down to the breakout area. It breaks above two different resistances and does not come back to the breakout area, but it uses the last closest one as support. That's a sign of high momentum. And I obviously got left behind on this one, which is that's what you get for being patient. Like I've been waiting 1 hour for a trade, putting in orders, and it's gone.
It happens to all of us all the time. I get left out or left behind all the time. Actually, that's the majority of the time what happens. It doesn't do everything on my list, but it does reverse. It does go and perhaps even hit my TP, but because it didn't tick all my boxes, I'm not part of it. And that's something I have grown to accept and not care too much, because it happens all the time with and it's a choice that I make. I only trade those entries, those setups that actually hit all the boxes on my trade plan, and automatically that means that I'm going to be not participating in a lot of other setups that are very alike, but are not exactly the ones that I should be trading.
This is an interesting comment. Do you think playing video games improves trading? I absolutely do not think it will. Going to the gym will help you become better at trading. Also, I think video games, and I say this as someone who loves to play video games, like video games also kind of condition you to have fast rewards. It does condition you to love fast-paced action. Video games is not giving you the right mental framework to be a good trader. Now, and because like you don't need that quick reaction. One thing that might be good with playing video games with like a joystick is you get I don't know what the word in English is, but
hand-to-eye coordination. Hand-to-eye coordination.
Yes. Which is not really something you need. I don't need that as a swing trader. You might need it in some way if you're like a high frequency scalper. Then that might be something that might be useful. But all in all, drop the games, go to the gym, go out for a walk, go out in the forest, watch the leaves. That's gonna make you a better trader.
Yeah, I think it's I'm on with that. I don't think video games. Maybe I don't know everything about video games, but I have been a player myself as I was growing up. Who hasn't been, right? So
yeah, exactly.
I don't think it gives you any edge or helps you with any skill that is needed as a trader, other than having a strategy how to play the game. If you're into strategizing, like if you I don't know if you remember, Jonatan, but there was this game Civilization. I think
I was just gonna say that's an awesome game. I love that game.
Well, I played that game for hours when I was my younger self. And that game, of course, its focuses on strategizing the game, your game plan, knowing what to do when. And of course, many games are like that, and I think that could help you with having a framework to how to approach the market, because you need to be effective and efficient with your resources. That is time, that is capital, and you need to have a strategy on top of strategies, right? So meaning your strategy, your trading strategy, but you need to have a strategy how to employ your strategies. You get my point. So those level of complexity in that you get on those kind of games, that could make sense. But other than that, a quick hand-to-eye coordination is helpful for a surgeon, and maybe a other profession, but as a trader, not so. I mean, a scalper, but that's very limited. Other than it's not like as a scalper you need to be pinpointing with mouse cursor or joystick where to enter the trade. I mean, you hit the hotkeys and you enter, if that's probably what you're doing. So yeah, I don't see the upside on focusing on video games. If anything, it reinforces that loop you don't want to have, which is the instant gratification loop, the dopamine rush. And the other thing that I don't like about video games, in relation to a trader forming, is that on the video games you get the reset button, right? The risk you take do not have consequences, because there's also a reset button. You can start the game, it's game over, and you start it again with very little consequence.
Unless you're playing Diablo on hardcore mode, then you die, and it's extremely painful, and it's traumatizing.
I'm not sure what you're talking about. Is that something you have some device on your body?
Do you know about the game Diablo? Do you know about Diablo? The game Diablo?
No, I don't know.
You don't know about Diablo?
No,
wow.
I don't.
Wow, that's intense. You don't know about Diablo?
What is? You have a electrifying device on your body that makes you feel the pain of the character?
No, you don't. Oh. But there's a hardcore mode where it's like when you die in the game, then your character dies. Like there's no reset button. Like you can play it for weeks and weeks, and then if you actually die, you die. But this is not a gaming live stream. But interesting that you did not know about. Do you know about World of Warcraft though? You know about that, right?
I've heard about it, but I've never played it.
Okay, it's the same people that created Diablo.
Oh, I see. I
Yeah.
see. Yeah, my gaming past ends with Civilizations. You may have an idea when that was. That was a long time ago.
Right.
Civilization
Well,
3, I think it was.
Civilization is a good game, though. It's a good game. I remember playing Quake. I loved playing
Oh,
Quake.
Quake.
Also,
Yeah.
I played Battlefield. I was actually one of the first people in the world who played Battlefield Vietnam because I lived close to the developers DICE who developed the game, and I was also
Really?
playing. I was playing the first Battlefield game competitively, and then the developers invited our group to be like the first one who tried
Wow.
the new Battlefield game. That was pretty cool.
Nice,
It's
nice. Well,
pretty
anyways, before
interesting.
we let's move on to trading back. But the
Well, maybe
conclusion
I'm
is
filled
that
here. Maybe I'm filled. Let's see if I'm filled. Wow, look at that. That is close. How did I not get filled on that? I'm gonna call Saul up quick. Tell me what happened on that one. Should have been filled. Should have been filled on that one, man. That's close. That was close.
how do you
Oh,
think
okay.
about this video game? What about
Oh,
this video
gold.
game?
GoldenEye for 64. That's a good game as well. What do you think about gold? Okay, let's take a look at the gold. Oh, well, I have it right here.
Hamed is something about a spike. Do you know anything about this? Any spike in any asset that Hamed?
Yeah, we had.
refers to?
I believe we had an insane spike in the S&P 500. Was that all across all indices? I don't know, but it was a bug, and maybe not a bug, but a glitch in the data feed in the MetaTrader. I was you didn't see that, but the support knows all about it. If you did get caught on the wrong side of that one, definitely reach out to support, and you'll get help with that. That's something. This is something that happens from time to time. There's going to be glitches or whatever in the price feed, and it happen on the indices.
We have to understand. I mean, the people in the audience, even though I don't know of this incident specifically, but this is based on technology, right? And where there's technology, there can be things that go wrong. Simply, that's how it works. It's not a perfect world, and so these things can happen. But the 5ers will accommodate and assist you any way that is reasonable.
Yep. I think
so. We're looking at gold.
Yeah, I'm just looking at this move on gold. That's insane. Okay, let me go back here. Let's take a look at gold.
Ooh, it is getting into that very nice area.
Yep.
That area on the that makes sense on multiple time frames. Yep. That's very interesting. I like that. We are building bearish order block though on the H. So the flow on the hourlies hasn't switched yet for a possible move. We have on the H2, we have a fresh order block being created or has been created already.
I think I'm just going to bring up your screen.
Oh, go ahead. No problem. Well, what I was saying is that we do have a quasi. I mentioned this because I have this analysis from before. We have a it's very short. Actually, that's on the 4 hour, but it is a quasi nonetheless. Let me show you. That's the quasi basically, which is within. It is not considering, right? It's not considering the bigger. Let me get this right. The bigger structure here that is also at play, where this is the areas that we want to be looking for the short, right? But it is considering this quasi, right? If price is trying to go up from here, where is it likely to, right? This move, let me show this move that we had, if that is the impulsive, if that is the market showing its hand that it wants to go long and higher prices from here, where is my area of value? And of course that is the order blocks that it created as it went and created that impulsive move, and it's coming right back into those areas, those structures. So to me, that's very interesting, because if it gets back, it has already gotten back into the H4, and also back into the entry order block on the H1, which we have alignment, right? So now we can be looking for a long. If we go to the daily, we have no reason, if I'm not mistaken, let me double check that. We don't have a reason yet to go long based on the price action. We don't have a fresh order block, and we don't have a entry order block long on the quasi, right? So I don't have alignment to go all the way and use it for the weekly time frame. But the thing is, we are on the higher time frame. We are in the fresh order block on the weekly, right? So even though I'm not able to because I'm missing the daily, I recognize that it's very, very interesting place to get in. That's exactly between those yellow lines where we are right now. So now that I have the hourlies telling me this is the great place to go long, right, for this move, going back to that top or something along those lines, perhaps to this area, because that's the daily order block we have there that's waiting for us to be to where the sellers will be stepping in again. What I want to see is I want to go to the lower time frames and see the reversal happening. Let me get the yellow lines to give you the idea where we are, right? The visuals on that. I want price within between those two yellow horizontal lines to show me a reversal on the lower time frame, and that would be my cue to start, getting in. And I don't see that yet, so I'm gonna be waiting. I would be waiting for a reversal, and a reversal in my case will be, right, a quasi being formed on some time frame on the lower time frame, and I want to be getting in on that retest of a relevant structure in that. If that happens, we don't know. I'm not predicting that this is going to happen, but if it does happen, then that's the perfect place where I want to be entering. So for a long, this looks very, very interesting for myself. How about you, Jonatan? What do you see in the market for gold?
For gold, I'm basically just looking at we got these lows right here, and I'm thinking I'm watching this as if we want to enter gold, this is, and I actually didn't look at your analysis because I was looking at my own chart here and trying to think of something, but I would assume that on the 4-hour, a level that you would be interested in looking at, and that would be the same for me. And when you're looking at order blocks, you look at the whole order blocks, the whole order block. When I look at an order block, what I like to do is just take the whole candle, and then I want to look at the 50% level of that candle, and then see if that aligns with any good horizontal level. So on the 4-hour, we have this level right here, and if we extend that, that's the 50% level, which comes in very nicely at. We can add a buffer around this level, and one way of doing that is to add. You go into style, and we can add the 0.25 and the 0.75, and then we create sort of a buffer around this area. Go in and we can remove the prices, and then we can extend this to the left as well, like that, and that aligns quite nicely as a horizontal level. Let's make it a little bit easier to look at, so we're just going to do that, and then we'll something like that, and now we can remove that level, and here we have horizontal lines, and when we have those horizontal lines, we can see that it's a very good horizontal level as support. We have the 50% fib, that's the middle of that order block, and then we have the 25% fib and the 75% fib of that order block. Let's encapsulate that with a horizontal, and you get this. So I think that right there is a very, very good looking horizontal level, and it's very close to invalidation. So if this is the low for gold, I would be looking at this level as a stop loss, perhaps go into the settings, and we might want to bring that down to and up below 3 to make sure we're not on the right there. And the general idea would be to look for entries somewhere around this area, with that being our invalidation level. And then as this looks like a range, we would probably target the highs here. And if price comes down here at the fibs of this move, we're seeing where is the short reload zone of this move if we come down here. Well, that's going to be right here. I would put the TP on that middle line right there. And this would be a trade that I would be looking to take on gold. Does that somewhat align with the analysis that you did?
Could you do a little recap on that?
Okay, so we had this is the 4-hour order block, and this zone is based on the middle of this horizontal level is the 50% level of that order block. And I said that this is close to invalidation of this possible range. So if I want to get in on gold close to the invalidation, then this would be the level I'm looking at. That would be my validation level, and then I would TP at the highs of this possible range.
Sure. Yes, because that is, what is that middle point? We're talking about the 2,622 and 58, 54.8, 55 actually.
What you mean this one?
Yeah, the middle point is what, 2,622 and a half?
Yeah.
Yeah, okay. That is, well, it's a little different than mine. But yes, I see the same structure. Although if I were to put my screen on, if you don't mind, the level that you are indicating is this order block, right? This order block. Let me get this. That's the order block that you're telling us, or that you're indicating to us, and you want the middle part of it, which is, as you can see here, the 50%. The midpoint is 2622.55. That's a great area. However, that is I agree with you. That's a superb area to be trading from. However, the the overlap that I talked to is the overlap between the H1, which is within a bigger H4. My H4 order block it consists of multiple H4 order blocks that are overlapping. And that's why I have a bigger area. And I would look for a little different combination of alignment or refinement based on other time frames. And the area is a little bit, my area is a little bit higher, but it's basically the bottom of my area is that line that you're referring to. So maybe it's going to be the same, just different approaches to roughly the same thing.
Yeah, so that's,
but it's a great area, by the way.
It is. That's cool. Yes, and
yeah, there was actually a question on. Let me see if I have this. Someone mentioned this. He said, "I feel the bullish weekly OB will no longer." I'm not sure what he meant by DOL, but anyways, will now no longer because price has reached from the bearish weekly order block. Well, I'm not sure. This is the weekly time frame. And I went to check the chart for gold, and if the text were right, I would agree with this user. Meaning, if there were a bearish order block on the weekly time frame, if that were the case, and price has touched that as the lower ignition order block was created and is coming back, I would agree with this statement, because that you don't know which order block is going to be the one that's going to make price break out of the range. Now we have created, you have two order blocks, meaning you have a range, the upper and the lower order area of that range, and you don't know if it's going to break to the downside or come back and break to the upside. However, I don't see that order block. At least it's not I only have one order block on the weekly time frame, which is to the upside. So there are order blocks, yes, on the daily time frame that are present, and price might react to them and perhaps come back. But based on the hierarchy of time frames, I don't expect the daily to be, highly likely to break the weekly. And so that's why I would expect something like this, if anything, right? It reacts to that order block, it comes back to the weekly, but because it's a weekly, which is stronger, it's going to eventually has more likelihood to break the daily as well. So I like the comment, by the way. But I agree with the person. However, I don't have the order on the weekly time frame. I don't have the structure there to change my idea. So basically, the weekly time frame, I only have one order block, which is the bullish order block that is being retested right now. And to me, that's a reason to have a slight bullish bias to expect price to, this structure, which we see on the lower time frame as a let me mark this better. This price action that we see on the lower time frame as a quasi on the H4. It makes sense to me that this could work because we have the weekly, pushing, causing us to have a bullish, light bias to a bullish bias, basically, which is, to me, that's the area where we are, where we have overlap of multiple time frames telling us that this area could be a great area for price to reverse. And if that were to happen, then you have everything in line. You have the hourlies, you have the and the weekly going to the same direction. So that's my idea on the on gold.
Perfect. Okay, so we do have the giveaway link in the comment section. So check the comment section on YouTube. It's a pinned comment, and the secret code is a name of the block that Victor loves. What's the name of the block that Victor loves? That's the secret code for today's giveaway. We are going to end the live stream a little bit earlier today, so make sure that you go in, you check that link, and you check the code. I gotta run. I gotta be back in just 2 minutes. Gotta just take care of something quickly. I'll be back in just a minute.
No problem. When you come back, we will be discussing something, but I'll mention it when you come back. No problem. Let's see. This is gold. So this is interesting. We already discussed this. Let's go to check on EU, because EU, of course, is, no, it's not a blog, but a block, right? Not a blog, but a block. All right, so let me put that it's in the comment of our stream. That's where you'll find the link, link to be used for the giveaway, of course. All right, let's look at EU. What do we have? What has happened since we last time we watched it? On the H4, did we close half an hour ago as a bullish engulfing? Did we? The open of this candle was 048 and the close is 048, which is a affirmative. To me, that is a newly formed bullish H4 order block, right? Meaning it is confirming on the higher time frame that buyers are coming in, not only based on the lower time frames where we had the reversal here, right? That tells us that the buyers are coming in, but also on the higher time frame, we are forming structures. I know it looks a bit crowded here, as the user explained to us or expressed in our last stream, but it is, to me, this is the H4. That's the new structure being formed, and it happens after that reversal on the lower time frame. So that means that's what we want to be seeing. If price is going to transition to continue going higher, right? It's going to show you on different time frame and bigger time frame. So not only on the 5 minute a reversal, you will see structures being formed, and on the 15 minute we have that as well, which is you can see how the let me point that I don't use the 50-minute for this reason, but you can imagine, not imagine, you can see that, let's see, we have a bullish order block being formed within the reversal pattern, but also before multiple ones being formed as the market is printing more information. And actually, we don't have a quasi on the 50-minute, or do we? Yes, we do. On the 50-minute, it's also visible. So there is a possibility of a new entry, although I don't trade that. I don't trade that time frame for my entries. But if I were to do that, then this structure, this order block, would be where I would be adding to my position, right? After I enter on the lower time frame, on the 1, 2, 3, 5 entry, if it were to happen on the 15-minute, it's not part of my trade plan, but I could. I mean, this is a valid entry to me. If price comes back into this order block, which was created at the release of the news, if I'm not mistaken, yes, then I would be, I could technically enter another structure, another entry, I would say. Jonatan, I had a question right before you left, and the question was, let's see, I think it was something from the audience. Someone asked about, I think, your opinion about where to take target on Bitcoin after it breaking out, because of course we have nothing on the left. We don't have any previous high to target or some other structure. What would you answer to this question? What would be a reasonable target for Bitcoin traders who are perhaps sitting on a lot of profits, because the Bitcoin price is currently at 107 and breaking that 100K mark recently. And they are, of course, I assume they are sitting on profit and are wondering, does it make sense to hold much longer? Are we up for a short-term retrace? Or what can we answer to them? What can we tell them?
So I think we're about slightly halfway from the beginning of the well, we're no, we're not. So this is late stage bull market, right? This is definitely the later stage of that bull market. I would say that we are about, I'd say we're about 75% completion of the bull market for Bitcoin. So we have about 25% left of this bull market is what I'm thinking. I could be completely wrong, and we've talked about this quite a lot. We could have an extreme move to the upside and a completely new cycle, a completely new super cycle if Trump does what he says he's going to do with Bitcoin, which I do not believe he's going to do. I do believe that this cycle will be similar to previous Bitcoin cycles. I think inauguration date, which comes in about 1 month, will be a sell the news event. I think we have a buy the rumor, sell the news event. Buy the rumor was the elections. Inauguration is the news event. I think we're gonna have a sell the news event. So it's very, very difficult. I would not recommend. It's just very difficult because, like, one part of me would want to say, like, I would not recommend buying Bitcoin here. But then again, like, but if you're not in Bitcoin, then you'll be left behind if there's a massive move, And if there's no massive move and this is actually the top, well, then you'll be left with the bag at the top for Bitcoin. So it's this is part of the cycle where I have to tell you guys that I wish you listened in 2023. Now, I was not on this channel back then, but I was screaming to everyone that wanted to listen, buy Bitcoin. So now it's kind of like we're at that late stage bull market where we are potentially entering the distribution phase. And the move has already kind of happened. So if you're holding Bitcoin, hopefully you've been holding Bitcoin for a long time. I can't really give you a good target, but for my own idea for a target would be around 200K at the later stages of next year's summer, is what I would say.
That's your target, but does it make sense for people who are not in the market to be entering here, because their risk reward ratio will be different? They will be entering at 107, and they will have their stop loss at what, compared to, and their targets at 200 plus. Does it still make sense for them, do you think? Because it made sense to you because you enter at what, 20, I think, 20 something, 23, I think, or was it?
Yeah, 20, I think 2022 or something is my average entry.
Yeah. So, but does it still make sense for them?
I mean, the thing is, it always makes sense to buy Bitcoin from a fundamental point of view. No matter what the price is, it always makes sense to buy Bitcoin. But you know what? I'm just going to pull this up because I do see this comment right here, and I've been notified of from support, The5ers support. You reached out to support and asked about your giveaway. I've read it. I've taken a look at it, and actually, you didn't receive an email, and that's completely my fault because there was one letter mistake in your email, and I've corrected this now. I sent it to the right person, and that person is unfortunately on a 2-day leave, but as soon as he gets back to the office, he's going to send you an email with the giveaway link. Thank you for patient, and I know you've been waiting for a very long time, but 2 more days, you'll get an email. If you don't have an email by Friday, just please let me know. I'll take care of it for you. So, okay, so it's obviously very difficult to be able to say, give a target for Bitcoin here. And if you're looking to buy Bitcoin right now, yeah. I mean, you kind of put me on the spot here. This is
I know. I'm sorry. I didn't want to do that.
No, but that's okay. That's okay. No, I'm just saying that it's extremely difficult, but I'm going to try, right? So with the risk of being left behind, I would look at a potential buying opportunity after inauguration. Okay, that's what I'm looking at.
Fair play. Well, I was gonna say, if I were to answer that, and I don't think I'm the right person to answer that because I'm not into crypto or Bitcoin as much as you are. You do have much more information and experience, so I should know my strength, which is not Bitcoin. I would say in a situation like this, I would still buy if I think it has a positive risk reward ratio and a high enough probability, even though I don't have enough data. But I would be entering much smaller size, be risking much less, because I can realize that I missed, right, the optimal opportunity, optimal level, and meaning that there is an increased risk that it might retrace much more. And one, I don't want to be risking as much anymore, and I would want to have the chance to enter more of my position if it were to come back to a more favorable level. If you enter here and that's the only thing that's all the risk you can take, then this is not the optimal place to be entering. You want to be entering at a demand area, not when it's breaking out, which is
but also you look at, if we look at inauguration as a possible sell the news event, if we have a massive move to the downside. Now I've been looking at this 75K area for quite a while, and it does feel like we need a we need a stabilizing move in the market before we continue higher. So I think it's I don't really like the way this is moving now. there's a lot of interesting developments. We have MicroStrategy being introduced to Nasdaq, I believe, which is huge. And like there's a lot of development, but a stabilizing move at this stage for Bitcoin would be a good thing, because it kind of neutralizes the sentiment, and we need that, because we don't want people to be too bullish. If people are too bullish, we don't want everyone to buy. Basically, we want some cash to be able to fuel the rest of the move. So if we are 75% of completion, we still have quite a long way to reach that 200K. We're talking about a doubling of Bitcoin's price, so we need capital to get there. We can't have everyone buying Bitcoin now, because that means that the top is near, right? Because if everyone buys Bitcoin, there's no one left to buy. Of course, there's we have a lot of people looking to buy Bitcoin. So, but still, a move down here, a 20-30% move to the downside, that would be one of those sentiment neutralizer, where people begin thinking like, this is the top. The top is here. A lot of people get liquidated. People start selling, and people start exiting the market, and that's where hopefully we can start looking at getting into a new position to take us to that way higher target. And hopefully that inauguration will be that sell the news event that I think it will be. And if that happens, we have the we need to confirm it with the S&P 500. So if we look at the S&P 500, if that happens, on around the same time as if there's no dip in the S&P 500, but there's a massive dip, maybe it's a dip on the S&P 500 down here, but there's a massive dip on Bitcoin, then and the S&P 500 does not confirm the dip on Bitcoin. If the S&P 500 shows no signs at all of a top, then that would be a good buying opportunity for Bitcoin. However, if the overall stock market starts to show signs of weakening, and there's various divergences across the stock indices, and we have a drop in Bitcoin, then we have to start thinking about a possible top scenario coming in much earlier than expected.
Yeah, that's I understand. I appreciate the difficulty of that question.
All right, guys. So we're gonna end the live stream a little bit earlier today. So so the thing is, we have a lot of people coming in here asking about the code. Now, the way I've got this set up is, and by the way, we already have over 100 people who are in the giveaway. So more than 100 people know about the secret code. And what we want to do here is, the giveaways are a way for us to give back to the community, right? We want to give back to the community. It's as a thank you for being here and just being general awesome with the the questions and everything. So we want to make sure that people who actually watch the live streams are here to the people who are actually here understands what the code is. I'm not going to tell you about the code now. You can of course tell everyone about the code if you want in the comments. But it's that's the reason why we're doing these codes a little bit more secretive, because we want to make sure that people are actually paying attention, and those who are paying attention are going to get rewarded by getting into the giveaway. We're not going to draw the winners of the giveaway today. We're going to draw the winners of the giveaway tomorrow. So we're doing a bigger giveaway tomorrow, where we're going to draw all the winners for the giveaways tomorrow, and we're also going to have Pedro on for the Brazil community. Should I say the Brazilian community, the Portuguese, Portuguese speaking community? Yeah. So that's it. That's it for today, guys. We did not really have any trades today. I did manage to close that AUDUSD position right before it was getting hit, because it was getting too late anyway, and I don't want to be holding that position after the after the live stream has ended. All right, that's it. Anything else you wanna end it here with, Victor?
No, I think it's been a great session with you guys, everyone watching those. We had great engagement from the audience. Great questions. We appreciate that. And tomorrow I'm excited because Pedro has some good insights to share with us all the time. Every time he's been on, he has he shows what it is for what it is to be a trader, a seasoned trader. I think that's valuable. I hope people
Definitely
are seeing that, because he's giving a great example in that respect. I mean, that's it for me as well. I hope you guys enjoyed it, and join us on Discord if you are able to. We have a great community, and I will be hosting a stream in about 50 minutes or so. And if not, tomorrow on our next stream on YouTube right here.
All right. Take care, guys, and see you all tomorrow. Bye.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.